This is Andy. Today is Saturday, June 24th, 2023. Today, we will look at the Korean economy in the first half of 2023 and predict the economic situation in 2024. This data cited from KLE report, Korea Economic Research Institute, and report from Samsung Economic Research Institute. The first half of 2023 is a difficult time in terms of the economy worldwide, due to the war in Ukraine and the conflict between the US and China. The Korean economy is projected to experience a 1.5% growth in 2023, driven by a downturn in exports, particularly semiconductors, before seeing a 2.3% growth in 2024 driven by an accelerating export growth resulting from a recovery in external demand. Headline inflation is set to follow a decelerating trajectory, with an expected rise of 3.4% in 2023 and 2.4% in 2024. Employment figures are forecast to rise by 270,000 in 2023, fueled by an increase in services production, with a steady increment of 170,000 anticipated for 2024. Let me see the current economic conditions as of June. The Korean economy remains sluggish due to a contraction in exports, primarily driven by faltering external conditions. Despite an upswing in private consumption, the first quarter GDP growth presented a lackluster 0.8% down due to a sharp dip in exports. By industry, services exhibited high growth, spearheaded by face-to-face businesses, while manufacturing showed an accelerated contraction due to weak exports. Domestic demand revealed a modest resurgence in private consumption, whereas investment stayed weak due to a deceleration in the manufacturing and housing markets. Private consumption sustained high growth due to a partial restoration of consumer sentiment and increasing travel demand. The demand for equipment investment is limited due to the manufacturing slowdown, while construction investment has shown moderate growth, despite leading indicators stagnating as a result of a setback in the housing market. Exports continued a significant downturn as external demand shrank, predominantly centering on semiconductors. Amid a shrinking global trade volume, the semiconductor industry plunged, keeping exports subdued. The current account diminished with sluggish exports and moderating slump in domestic demand. Nevertheless, Korea's external financial stability remains commendable given the considerable size of net foreign assets. Although the manufacturing industry weakened, employment conditions remained favorable thanks to strong growth in services production, while core inflation remained elevated. Considering the overall economic conditions, both external and internal, the Korean economy is expected to experience a moderation in economic slowdown during the second half of the year, following a sharp decline in the manufacturing sector in the first half. In the first half of 2023, Korea's economic growth rate is likely to fall to around 1% due to the slump in semiconductors, its main export item, amid a global economic slowdown. However, a modest recovery is anticipated in the second half due to the recuperation of the Chinese economy and easing of the semiconductor slump. Consequently, despite a resurgence in private consumption, the Korean economy is projected to grow by only 1.5% in 2023, due to sluggish exports, marking a deceleration from the 2.6% growth rate achieved in 2022. The Korean economy is projected to follow a moderate recovery trajectory in 2024, with inflation gradually stabilizing and macroeconomic conditions anticipated to return to normal levels by year-end. With regards to macroeconomic policy, it is advisable to maintain the current monetary and fiscal stance for the time being, while also preparing for possible turbulence in financial markets. The recent economic deceleration is largely due to a contraction in goods exports, an outcome of deteriorating external conditions beyond our control. However, the contraction in domestic demand has been showing signs of easing, particularly in consumption. Despite the economic slowdown, employment conditions remain favorable, and core inflation high, necessitating a stringent macro policy stance to achieve inflation stability. Monetary policy should maintain the current interest rate level to allow inflation to converge to the target of 2%. Fiscal policy, on the other hand, should prioritize securing mid- and long-term growth engines and protecting the vulnerable over stimulating the economy. Potential disruptions to financial market stability due to persistently high interest rates, both domestically and internationally, must be taken into account. Hence, policy measures should be implemented to safeguard the financial system from such risks. Additionally, structural reforms to invigorate economic dynamism and ensure sustainable growth must be prioritized. The policy emphasis should be on constructing public consensus on labor, education, and pension reforms, which the government has recognized as critical issues, and on fully implementing these reforms. The following are the outlook of second half of 2023, and for 2024. Assumed external conditions as follows. A deceleration in the global economy is projected in 2023 and 2024, relative to 2022. According to IMF forecasts, global economic growth is poised to decline to 2.8% in 2023 from 3.4% in 2022, and remain subdued at 3.0% in 2024, attributable to persistent high interest rates in major economies and escalating financial market uncertainty. Crude oil prices are expected to gradually decelerate from $96 per barrel in 2022 to around $76 in 2023, and further to $68 in 2024. The Korean won, in terms of the real effective exchange rate, is anticipated to remain relatively stable at the recent level. The Korean economy is projected to experience a 1.5% growth in 2023, driven by a downturn in exports, particularly semiconductors, before seeing a 2.3% growth in 2024 driven by an accelerating export growth resulting from a recovery in external demand. The following are the outlook of second half of 2023, and for 2024. Assumed external conditions as follows. A deceleration in the global economy is projected in 2023 and 2024, relative to 2022. According to IMF forecasts, global economic growth is poised to decline to 2.8% in 2023 from 3.4% in 2022, and remain subdued at 3.0% in 2024, attributable to persistent high interest rates in major economies and escalating financial market uncertainty. Crude oil prices are expected to gradually decelerate from $96 per barrel in 2022 to around $76 in 2023, and further to $68 in 2024. The Korean won, in terms of the real effective exchange rate, is anticipated to remain relatively stable at the recent level. The Korean economy is projected to experience a 1.5% growth in 2023, driven by a downturn in exports, particularly semiconductors, before seeing a 2.3% growth in 2024 driven by an accelerating export growth resulting from a recovery in external demand. The current account surplus, standing at $16.4 billion, is projected to decrease significantly in 2023, owing to a contraction in exports, before expanding to $38.3 billion in 2024, driven by a revival in external demand and improved terms of trade. Consumer prices are projected to rise at a slower pace in 2023, as supply-side inflationary pressures ease, with a continued deceleration anticipated in 2024. The number of employed persons is expected to increase by 270,000 in 2023, facilitated by an increase in services production, followed by a steady increment of 170,000 in 2024. Considering the risk factors are as follows. The pace and timing of semiconductor demand recovery, alongside the extent of the spillover from China's economic revival, will significantly influence the growth trajectory of the Korean economy. Should the anticipated recovery in semiconductor demand not materialize, by the second half of 2023, the resurgence of the Korean economy could be postponed. If China's economic recovery remains confined to the domestic service industry without spilling over into the investment sector, its positive impact on the Korean economy could be minimal. Korea's economic growth could further decelerate if the situation in Ukraine deteriorates, causing a surge in grain and energy prices, or if financial markets destabilize due to persistent high interest rates in major economies. Should headline inflation escalate, driven by increased food and energy prices, additional rate hikes could prolong the economic slowdown. Next is the Korean real estate market's situation in first half year. In 2023, the housing market continued to be sluggish due to significant decreases in housing starts and pre-sale apartment units, though the decline in sales and Jinsei prices eased. In April, housing sales prices saw a growth of -0.47%, a slower decline than the previous month's -0.78%, while transaction volumes fell considerably. Sales prices in most regions registered a less pronounced decline, amounting to -0.49% in the capital region and -0.45%. Sales transactions numbered 48,000 units, a drop of 18.6% from a year ago 58,000, with contractions in both the capital and non-capital regions. The housing rental market experienced a slower decrease in rent prices. The anticipated rise in new housing supply may exert downward pressure on rent prices. Both Jinsei prices -1.13% to -0.63%, and the consolidated monthly rent prices -0.24% to -0.18% showed a smaller decrease compared to the previous month. Rent price weakness is likely to continue as the number of scheduled apartment move-ins, 89,000 units, 19.3% sharply increased in Q2 of this year. Housing starts and pre-sale apartment units underwent a sharp decline, reflecting the current housing market slump. Housing starts saw a drop of 60.4% to 14,000 units, while pre-sale apartment units 12,000 decreased by 58.5%. The prospect of the Korean economy in future is subject to various factors and uncertainties. Here are some key points to consider regarding the outlook for the economy. From a macro perspective, the Korean economy faces several challenges that can be considered weaknesses. These include population decline, aging population, declining birth rate, and deteriorating relations with China. Let's discuss each of these issues. Population decline. South Korea is experiencing a declining population, primarily due to low birth rates and an aging population. The country's fertility rate has been consistently below the replacement level of 2.1 since the 1970s. A shrinking population can pose challenges to economic growth as it leads to a smaller labor force and reduced domestic demand. Aging population. The Korean society is rapidly aging, with a significant proportion of the population entering retirement age. An aging population creates strains on the social security system as healthcare and pension costs increase. It also impacts the labor market, as a smaller share of the population remains in the workforce, potentially leading to labor shortages and reduced productivity. Declining birth rate. The declining birth rate in South Korea is a long-standing issue. It can have long-term consequences on the economy, as a smaller working-age population will have to support a larger elderly population. This places additional pressure on the social welfare system and can hinder economic growth. Deteriorating relations with China. South Korea has experienced strained relations with China in recent years due to political and economic factors. China is a significant trading partner for South Korea, and any deterioration in relations can have adverse effects on trade and investment flows between the two countries. This can impact various sectors, such as tourism, exports, and foreign direct investment. It is important to note that while these factors present challenges, the Korean government has implemented various policies and initiatives to address these issues. Efforts have been made to promote a better work-life balance, encourage higher birth rates, and enhance relations with other trading partners to diversify economic ties. However, the long-term implications of these challenges will require ongoing attention and comprehensive strategies to ensure sustainable economic development. We provide best services with the motto of low cost and trust for foreigners from all over the world who want to purchase real estate such as houses, land, and buildings in Korea. We also provide services for foreigners to settle down, such as real estate investment, immigration, and living services. If you have any further inquiries, please feel free to contact via phone, and I will explain them the best I can. In addition, I also deal with lease service to foreign students residing in South Korea and foreign nationals on short-term residence for business purposes, so I hope to see more interactions in the future.